What's going on, traders? This is Andrew O'Connell with Pristine Capital coming at you with yet another market recap video. It is June 17th, 2021. Please go ahead and click the like button on this video and subscribe to my channel if you enjoy this content. Really appreciate it. Helps the YouTube algorithm, the almighty algo. So yeah, really appreciate it. Today we're going to talk about the price action in the indices. We will go under the hood and check out our sectors and style factors as we always do. We're going to take a look at some of the trades that I put on today. For the most part, I was taking trades off today. And then we'll go over our options order flow. Before we jump into all that, quick risk disclaimer, nothing in this video should be construed as investment advice or recommendations. Please follow your own trading plan and your own risk parameters. And last but certainly not least, do not YOLO your entire account into any one of my trades. All right, let's jump in here. First things first, I just want to thank everyone. There are a lot of new people that are joining the Pristine Capital trading community, monthly memberships, free trials, all that good stuff. And we're just getting a lot more adoption around the service. So I just want to thank everyone that is, in the service, trialing the service. I really appreciate it. And definitely, right now, like what I'm doing right now, I'm getting to do exactly what I love every single day. And I get to share my work with all you guys. I get to chat with you guys in our member chat. So yeah, I'm just, really thankful. So I appreciate it. All right, let's jump in here and let's go through our market indices. All right, so S&P 500 box scores for today. We had the SPY ETF finish down 0.03%. We had the NASDAQ QQQ finish up 1.27%. We had the IWM small caps finish down 1.12%, which are a big loser for the day. And then we had the Dow Jones finish down 0.62%. So I tweeted something a bit earlier. I called this a tale of two tapes because I really think that's what was happening here. We had some stocks that were just knocking it out of the park, absolutely crushing it. Like, your Apples, your Googles, your Facebooks. Then we had the cyclicals that were just completely got torpedoed. So you can see this is our S&P 500. A couple things that are noteworthy here. We did close above this monthly value area, which is a good thing. And we also closed above this 20-day simple moving average. So the market definitely took the happy path today, as I like to call it. After yesterday's candle, this could have easily gone the unhappy path where maybe, we're testing that point of control, testing that 50-day simple moving average. Yeah, we ended up closing with a nice green candle for today, which is good. If we look over at the NASDAQ NQ here, you can see we made a new all-time high in the NASDAQ. So that is a huge milestone. About a month ago, everyone was as bearish as you can be on tech. And now here we are. Everything has come full circle. You can see we're above this monthly value area. We're above the key moving averages. The 20-day crossed above the 50, which is awesome. So yeah, we're looking amazing for the NASDAQ. And then let's take a look at the Russell. It shows us our small caps. Small caps did get the rollover today, so I'd been mentioning the past few days how it just started to look ugly. And usually there are tremors before the earthquake. So yeah, this to me seemed like the earthquake today. We tagged this monthly value area high, and we actually dipped inside the monthly value area, and we tagged the 50-day simple moving average. Some buyers did come in, though, in support of this. We did not close on the lows, and we actually closed above the 20-day simple moving average. So not all that bad, all things considered. And then we'll go to our Dow Jones, the dogs of the Dow, down 0.62%. So the Dow Jones, we had been talking about this the past couple days, how technically this one's just not really looking that great. You can see now we're below all the key moving averages, and we're also below this monthly value area. So the Dow Jones really was leading us for months and months and months. Really, once we got the vaccine announcement, which at this point seems so long ago. Yeah, Dow Jones was fantastic, and now it looks like it's reverting back to its old ways of being a laggard. All right, so taking a look at our breadth here. Breadth was horrible today. We had negative breadth in the SPY, the IWM, and the Dow Jones. But NASDAQ breadth was very strong, very positive. So depending on which areas of the market that you're in, you're either having an awesome trading day or a horrific trading day. Looking at our heat map here, you can see a lot of these tech names just crushed it. So Apple crushed it, Nvidia, Amazon, Tesla, all these names. But then when you look at energy horrific, industrials horrific, financials horrendous. So yeah, there was a lot of carnage as well. And we're going to see the same thing when we go to our sectors here. You can see solar energy at the top slot here in terms of momentum, followed by the ARK Fund, and followed by the Spider Innovative Tech Fund. Then you can see at the bottom of our list now we have gold miners, we have the cannabis names, and we have materials. Yeah, some of these areas like regional banks, boom, down 5.03%. Crazy. XLF down almost 3%. So a lot of these just hammered. And we go to our style factors, same exact thing. We had worst performing style factor was high beta, and then best performing style factor was growth. And then, yeah, cyclicals also got absolutely demolished. So let's pull up a couple of these just to show you a little bit under the hood. I referenced these earlier in a tweet. Yeah, when you look at the financials, just look at that candle. So that means like when you see candles like that, usually that is capitulation. Usually it means a bunch of different players are all forced to do the same thing on the same day, which is sell their financials or liquidate them. And what I'm guessing is there was probably a lot of firms across Wall Street that they were all in this reflation trade and the reopening trade where it's like, okay, get long financials, industrials, energy, short tech, short this, short that, short the momentum names, short ARK. Remember everybody was talking about ARK blowing up? Remember that? And look at ARK now. So it just goes to show the narratives kind of follow the price action. So it makes sense, follow the price action, not the narratives. Because if you follow the narratives, you can get stuck on an old narrative. Yeah, but the ARK Fund has been in, a little short-term uptrend. Now it's above all the key moving averages. But yeah, sometimes when you get days like this, we'll look XLI also. This one looks a little bit better, but yeah, you can see also very ugly. Transports just looked ugly. All these. So to me, it's like seeing the complete weakness in those areas and then juxtapose that with the strength in tech. I'm thinking there's probably a lot of players that had long short books, that they were long value, short growth, and they might have been liquidating their holdings today. So as part of liquidating, they have to sell all their value stocks and cyclicals, and then they have to buy back all of their shorts they have in growth. So when these kinds of things happen, I try to be cognizant of what's going on, because I know most likely there's some fund out there that's literally getting liquidated. So sometimes you can get the strength and growth, and then all of a sudden it just turns into a broad market correction. So I would definitely classify what we're seeing now as tremors. That's what I would call it. Because it's almost like, when you're in the markets every day, it's almost like you're in a jungle. And if you've ever seen animals, even my cats, they do this. They will hear the slightest noise and their head turns, and they're aware that there might be some danger. So I think in the markets it's very similar, where most of the time when we get corrective sequences in the market, there always are some tremors first. And if you are sort of like a sentient, being, and you try to keep your ear to the ground to those tremors, it's not like you can predict what's going to happen next, but there's times when you might be like, okay, I'm seeing some of these tremors. Maybe that's a signal to me that I'm not going to be all in on risk, or I'm not going to be adding to positions or things like that. I'm not going to just put it all on the table on weekly options, that sort of thing. So yeah, I sort of see what's happening. The breadth is horrible. Looks like liquidations in value. So while my bias is bullish, those things are starting to stack up in the back of my mind. We have options expiration tomorrow. And then we have quarter end at the end of June. So I don't know if you remember what happened last quarter end, but if you don't, I would definitely look back and just see what happened on quarter end. Let's see if we can actually pull it up here. But that might take a long time. Let's see. Yeah, so this was last quarter end right here. It was down here in March. So you can see up until mid-March, we were just sailing. And then this is March 18th. Boom, red candle. And then we kind of just floundered into quarter end here. It looks like we ended up recovering at the very end. But yeah, there was definitely a corrective sequence in there. So that's just something I'm trying to be cognizant of. Like quarter end, everyone, if they have gains on things, they might just be like, oh, let me book some of these ahead of quarter end. Same thing if they have losers on their books. They might be like, oh, I need to get this off my books, that sort of thing. So I'm just trying to be cognizant of all that. Okay, so let's jump over. We looked at all that. Let's take a look at a few of my trades for the day. And what do we have here? So yeah, in terms of options trades, I got long some CrowdStrike July 16th, 240 strike calls at 9:38 a.m. I started to see the strength in these growth names on the tape. CrowdStrike was something that was at the top of my watch list. I ended up closing those out about 40 minutes later for $9.40 because I figured, hey, like I'm seeing weakness in other parts of the market. I'm just going to take this off and just take the win in like 40 minutes. I had put on some Lotto Apple calls yesterday on the lows of the day when we had that huge washout. So I closed out a third of those for another third of them. I had closed the initial third yesterday. Closed those out for $1.90. I paid $1.18 for those. I closed out the remainder at $11.55 for $2.17. And I paid $1.18. So almost a double on that. Not quite, maybe like an 80% or 90% gain. So yeah, throughout the day, I was just kind of like, let me scale out of some of these positions because the growth names are really working. And yeah, so DocuSign was another one. I got long some DocuSign calls the other day. I took those off for $15.45. I had paid $13.35, so that was another pretty good one. Towards the end of the session, I added to my SPY 421 July 16th calls for $5.86. Originally, I paid $5.85 for some of those, so I just added to the position a little bit. But I ended up taking it off maybe an hour and a half later. I closed those out for $5.62. I had paid $5.85, so took a very small loss on those. And I just put here, would multi-standard deviation event in the marketplace today, would rather take this risk in just in case players get margin calls or if there's some sort of weakness. Really my thinking here was, okay, I've had some nice winners today that I just scaled out of, booked them. When you're dealing with call options that expire in 1 month, they're essentially a binary event where it's like you're either going to make some money or you could really lose the entire premium. So as I started thinking again about, what I'm seeing in the market, I started thinking like I could totally go keep these. Maybe they end up being nice winners. But at this point, I really feel like it's a coin toss into quarter end and into options expiration. So I was like, you know what? I don't really feel like I have an edge in this trade. Like this is literally just like me flipping a coin and feels more like a gamble. So I just took that one in. And I also closed out the remaining half of my Futu July 16th 150 by 160 call spreads. Took those off for $4.30. I had paid $2.57 for those. So yeah, maybe like a 70% return on that. Still holding my Futu common shares. Yeah, so I still have my commons on. That was another thing where it's like I have my common shares on. Do I really need to have leverage on that as well? But yeah, Futu looks good here. So Futu has been consolidating. If these Chinese equities can just get off the mat, I think this thing will have a really nice run. So yeah, for that reason, I still have my common shares on. And let's see, it looks like FXI had a little bit of a bounce today. Yeah, FXI was up 1.4%. So yeah, if these Chinese names continue to move, I would imagine Futu is going to be one of the first names out of that group to start hitting new highs. So we'll see. Definitely want to keep an eye on Futu, still long. But yeah, I just scaled that off. And then let's take a look. We're going to go to some stock trades for today. I closed out more of my Cloudflare common stock for $99.62. I had paid $90.35 for that position. So now I'm down to half of what I originally bought. Progeny, this was one that I put on yesterday. Closed that out for $63.73. I had paid $65.40. I just put here breakout I was looking for didn't materialize. So that was one where I was like, I could continue to hold Progeny. But yeah, the reason for which I entered was no longer valid. So I was like, let me just take the small loss here, just clear it from the books. And then this one was pretty cool. So I added to my starter position in Upstart for 126.41. I had like a very tiny starter. It was like less than 1% of my account that I threw on. And I was like, let me, add to this now. Upstart has been an awesome name. It's crushed earnings, crazy mover. They had a huge spill into their share lockup expiry. And what I'm seeing here is the beginning of some tighter price action. And we're holding above this monthly point of control. So I actually like my odds now on this stock because I can trade against that point of control. And, the share lockup expiry already happened. I'm sure people are still selling their shares as insiders. But this has been a really strong name. And I would rather just start scaling in down here than, this name, when it moves, it can really move. This name could move up from 125 to 150 in a day. Like, it just moves like that. So yeah, I'm starting to scale in down here. And that about does it for my trades for the day. Let's see how we're doing on time here. Looks like we're a little bit slower than yesterday. My goal for these videos is I think like a 10 to 15 minute video is good, because I know like nobody wants to watch like a 30-minute video. So let's see. See, I'm just trying to keep it nice and tight. Let's see, some of these names that are sticking out, you can see within the SPX complex, ton of volume here. Amazon, which was an incredible mover today. You can see a lot of call flow for Amazon coming in for July, June. Yeah, it looks like a lot of these are shorter dated. But yeah, Amazon has just been a fantastic mover. Yeah, this went up 2.17%. Really nice. And this one's on the verge of breaking out to new highs here. So yeah, Amazon looking really good. Now let's go back a level. And then I can also see there's some flow for... I see some flow for JP Morgan and NVIDIA. These are like, two completely opposite stories here. JPM, look at this. It's kind of ugly on the weekly. And yeah, multi-standard deviation sell-off here. Whereas NVIDIA has been, the golden child in this market. NVIDIA just so dominant, up to almost $750 now. So yeah, definitely two very different looking stocks. But yeah, call flow coming in for both of those. But that about does it for this market recap video. Hope you all had an awesome trading session, and I will see you all tomorrow.